All right, so let's talk about specific metrics that all small business owners should know about. Now, I understand that not everyone went to business school, not everyone studied and specialized in finances. So I often find a lot in my line of work that there will be sometimes you will see people that are making a whole lot of money, but they really don't understand money. They don't understand finances. They don't understand accounting, and that's okay. I think the way our system is set up, it's not necessarily geared for us to learn that right out of school, but it is important that you eventually learn these type of metrics and skills. So I'm going to give you today 3 important financial metrics that you should know as a small business owner. So number 1, you want to know what net income is and what is the difference between net income and gross income. Why is that important? Because gross income is actually the funds that you bring in without accounting for any expenses. Now, net income is actually what you keep at the end of the day after accounting for all of your expenses. So what you'll see on any profit and loss statement on a month-to-month basis is the top line will show the gross income, just money that you brought in, but the bottom line will show the net profit or net income. These are 2 ways to say the same thing. And that will actually show what you're keeping from how well you did that particular month, okay? So it's important to know the difference because you might be thinking, well, I made all this money. A lot of people, when they talk about income and revenue, they always talk about the top line, but they never talk about the net of that. For example, someone can say, hey, I made $1 million last year. Well, that's great, but how much did you keep? Because what you kept will be considered your net income. So you made $1 million, but you spent $2 million. Well, my friend, you have a business that's probably not going very well, and it's probably going to be closing soon. Okay, well, here is another important metric that small business owners should know. They should know about their customer acquisition costs. So what does that mean? So customer acquisition costs is essentially measuring how much it costs to acquire new customers. And let me tell you why that's important. When you're going out to try to close deals, you want to know what is the financial cost to do so. Because once you finally close that deal, you now have what we call a customer. But depending on how much it costs to acquire that customer and how much that customer brings into the company over the lifetime, their lifetime value essentially, will determine whether or not that acquiring of a new customer was actually a benefit from a financial standpoint or more of a liability, where it might actually turn out that that new customer, the cost to acquire that new customer, was actually costing the business more than the lifetime value of that customer will add to your business. So we want to know these metrics as small business owners because that will determine what is actually hitting that profit line and what is actually staying in your pocket at the end of the day. The final one that I'm going to talk about today is called your cash runway. So cash runway is telling you how long can you stay in business with the amount of cash you have left over. So we want to know, one, how much are you burning essentially? You know, every time you're getting paid, what are you having to pay out and what's left over from that? And we want to know, if we're projecting that over a long-term forecast, we want to know at what point will we run out of cash? Because essentially we know cash is king. So if you run out of cash, that means you pretty much your business is going to run out as well, unless you get some help from someone. So essentially that cash runway gives you a timer. So you can just set your clock and say, based off of the actions that we're currently doing, we are going to be able to stay in business for this amount of time. Now, if we continue along this certain path, that cash runway could either go longer or shorter. So your virtual CFO can help you out in determining that. So these are 3 important metrics that you should know as a small business owner. Now, I know that not everyone went to Harvard University or even really a school that teaches these type of real world math and finance and accounting questions and concerns. So I think it's important to get with people that know these things that can help guide you along the way as you're building your small business so that you are in the driver's seat. All right, if you need any help with that, reach out at fintrae.com and we'll be happy to help you.